What's up, YouTube? It's Joe Catchpolia sitting on the couch making some money investing in fractional real estate online, as usual. Today, there is a VIP launch of the Mayflower on Mogul. This is a single-family home Padsplit in Tampa, Florida. I say today, this has actually happened yesterday. It's early in the morning the next day. So it'll probably be live on the platform soon, if it's not already by the time you're watching this. The purchase price $350,000. It is a pad split, but it's only 6 bedrooms, 2 bathrooms, which I like that a lot. If you've watched any of my other videos about their pad splits, one of the things that makes me nervous is when they're trying to, cram too many beds and baths into one place. It makes me worry about the future, as far as if there's some new regulation that stops it. This is another one that they have listed as a core product. Year one average yield 8.6%, or year one yield 8.6% is what they're projecting. Average yield 12.1, levered IRR 12. Again, these are lower than the averages we've come to expect from Mogul. But maybe this is going to be the new normal, because I've said that quite a few times recently, right? We shall see. But this is listed as core. There's a couple of reasons to believe them that I think it fits that description better than any of the other ones we've seen from them that I've really questioned. Okay, could we call it that? So I'm going to get into that in a little bit. But okay, let's start off. It is in Tampa. We always like to look at, population growth rates. One of the things they noted in the email is that it has the second fastest growing GDP among mid-sized U.S. metros. Strong population gains, pro-business environment, job growth, and tech, finance, healthcare, tourism. All that's great. I like Tampa. If we look at the city, it's had a fantastic population trends. If we look at the metro area, again, it has very strong population trends. So that's something I like quite a bit about it. Looking at the market, their housing market, at least in this zip code, it's been rough, right? 1 year value change, it's gone down 8.8%. That's a pretty strong down. And if you look at this, we've seen this shape in a lot of these charts, although this is definitely the strongest downslope we've seen in any of them that I can think of. So having the worst last year, Zillow thinks it's going to go up 0.2% over the next year. I don't know. I mean, I guess you can start to see a little bit of flattening here, so maybe that's going to rebound. Obviously, it's going to depend a lot on macro factors and interest rates and whatnot. But yeah, this is one of the worst 1 year changes in value that we've seen in any of the markets that I've looked at. I was kind of surprised by that because Tampa's been growing so well. But I think that they were an area, well, and I mean, you can tell they had an extremely pronounced boom, so their bust is coming down a little bit, and it took a little while too. So a lot of the other places that had a bigger dip after 2022. So anyway, not the best trend there. Zillow thinks it's going back up. We will see. So let's see. Like I said, they listed this as core. Why do I think that's a good descriptor for this one versus some of the others? So I think pad splits, they're going to be more stable than the short-term rentals. And so, core, you expect long-term stable returns. So if you're gonna call anything on the Mogul website core, pad splits I think are more likely to be than others. It's a well-developed market. It's not a new neighborhood. It's not it's not a transitioning neighborhood where there's a lot of new construction in a place where there's a lot of older, rougher properties. It is I think the 6 bedroom, the fact that it's only 6 bedrooms leads to that, right? Because you're going to, although it was last time it was sold as a 4-bedroom, 2-bath. But this is one where your long-term outlook for it, it's not you could sell this as a single family home at some time in the future. So I think that adds a little bit to the safety aspect of it. And then something else that I think Ike pointed this out in the Discord. Oh, that reminds me. Please like and subscribe. In the description of this video, I have links to all the places where I'm currently investing in fractional real estate online, including on Mogul. And they do give you, some of them give you bonus money for your first investment from using some of those links. Some of them will say that they will, and then they haven't been honoring it recently. That's lofty at the moment, but they say they will in the future again. Also in the description of this video, there's a link to the Discord that I have set up that I just mentioned. A whole bunch of us are in there talking about several different platforms on a daily basis, Mogul being one of them. If you're going to invest in any of the platforms that are mentioned or any of the properties, please do your own due diligence. Just because I'm investing in one or I'm not doesn't mean it's the right answer for you. I've bought a whole bunch of the Mogul properties already, although I've passed on several of the recent ones. I feel like they haven't been as attractive as some of the earlier ones, and not really sure what's going on there. But it is, I don't know if they're just getting a little bit more conservative in the way that they're showing deals, or if they're having a harder time, getting good deals. We'll see. And I'm going to get into this one a little bit more. I mentioned that it's 12% is below their average. It's still a fantastic average yield over a hold period, starting with an 8.6. Starting with an 8.6 in year one. It's a very strong cash on cash return in most markets to be able to buy, in place income that's operating that strongly. So, I always want to point that out. The other thing, they're hitting that return with 70% loan to value on this deal. If you look at a lot of the other deals, they're at 75%, and some are even at 80%. So this is another factor. Typically, one of the criteria for core deals, or at least, again, this is from 20 years ago working in the commercial world when we, use those same core value add or core plus value add. We always added a fourth one, which is opportunistic. And so, some of these things evolve a little bit. And so I think that that's part of what's happening. But one of the aspects that I always was associated with core is lower leverage, right? You're getting a stable yield with lower leverage and long term. So this is one, I think that's another aspect, right? It's, if you pumped this up to, 75, like the others, it brings your average yield to like 13%. And so, they're not predicting a refinance with a higher LTV until year 5. And like always, I like to shut that off and see what that does. And okay, drops us down to 11.6 and 10.9. So it is having an impact to even 5 years out, 12.1 and 12. But, it's not, I've talked about that quite a bit. I think it's relatively, reasonable to assume you're going to be able to refinance sometime in the next 5 years. Last couple of weeks, rates have been moving down again. So we'll see where that goes. Let's jump into a few of the easy stuff first so I can close some tabs on here. All right, let's see. FEMA flood map. I looked at this. Looked perfectly fine to me. I think this is just a pure zone X, no shading as far as I can tell. I was pretty happy with that. The spot crime, the crime was difficult to figure out because spot crime shows all these little crimes, but you have to click into these because these are like misdemeanors. There was like a underage curfew broken and stuff like that. So this made me think, okay, there's not a ton of crime, although this happened over the course of just a few days. And you can see it's pretty zoomed out too, right? Like when we come into the neighborhood, we didn't have anything right here. And so that's what happens if we do search this area. Yeah, it just zooms. So we're not really getting anything there. So let's close that. I looked at, Neighborhood Scout. The Tampa in general, it has a 18 index, which means it's one of, it's only safer than 18% of U.S. cities, meaning, the other 82% are safer than Tampa, right? Or something slightly less than 80%. And then when you look at this map, this is the part of Tampa that we're in. It is the highest or very close to the highest crime rating, right? We've got, this darkest color is what it looks like. Actually, I'm not sure. Oh, the dots are just like the actual city itself, I think. But so, it's right here that we're looking at, and it is basically the darkest shading, indicating that it is one of the most dangerous parts of the city. That's not, so crime, not great. Now, we've seen this quite a bit in, the locations for Padsplits. They tend to be in some of the higher crime areas, although I'd like to be not in the highest crime area. But again, when I looked at the spot crime, that didn't look so bad. So it's a little bit strange to me. I looked up the property in the public records because there's a discrepancy. They have it as 1188 square feet. If you look on Zillow and all the other places, they're saying it's 1,054. So I wanted to look it up in the public records. And so the gross area is 1188. This includes 2 porches and a utility area that are not listed in the heated area. And typically when you sell a home, when you appraise a home, the criteria that's used to, when you're saying, we're selling this dollars per square foot, it's usually the heated or air conditioned space that counts. So really, when we're comparing this property to the comps, I think this 1,054 is the right number to be using. It's not this 1188. So this is another one. I think they do have in-place income. It's been rented as a pad split for multiple years. Their year one projection is below the current run rate. So I think they're being really conservative on yield again. But in my mind, this $350,000 value is really hard to justify. This purchase price is very tough. And so I don't know what's going on. I've said this a lot of times lately with Mogul's properties. And you know me, I believe yield is temporary, basis is forever. I don't want to be caught with these properties that we overpaid for, and all of a sudden we can't operate at them as pad splits, and it doesn't make any sense as a long-term rental. And then we're stuck, and what are we doing? So that's what I'm kind of worried about with this. When we look at, Zillow thinks it's only worth $271,000, and this is why the square footage is important, right? Because if it was actually closer to 1,200 square feet, well, then we'd have to add a significant amount to that, and the 350 would start to make sense. Zillow did think it's just a 2-bedroom, 2-bath. Last time it was sold as a renovated 4-bedroom, 4-bathroom, or 4-bedroom, 2-bathroom, and it sold for $284,000. And this is back, at the top of that little. I think I already closed that, but at the top of the curve when we saw, basically the peak in the market. Although it looks like they thought at some point it went up. But yeah, the Zillow thinks it's gone down over the last year. Realtor does as well. They still have the same square footage, although they think this is 4 bedrooms, 2 baths. Their estimate is $275,000. So again, $75,000 less than what we're talking about. When they added the 2 bedrooms, as far as I can tell, they didn't add any square footage, right? And so it doesn't appear, I don't think that they enclosed those porches or something like that. I think it is just, and if that's the case, I don't think we created any additional square footage or any additional value with that renovation based on how properties are typically sold. Now, Mogul's stance is, well, these properties are going to be sold based on, yield and, the capital markets, how they're valuing that yield and, other investors buying. If you really believe in that, well, then, we don't have a good way of valuing properties other than, what's the yield that you're looking for. And then, that's how we price it. But again, Redfin thinks it's just under 300,000. This is actually the most generous one I could find anywhere. I think it was Brian in the why am I in the Discord? I could be wrong about who it was, but somebody in the Discord mentioned that they asked AI to help, an AI that they use, to help them price it. And so I was like, oh, well, you know what? Let me ask Grok what Grok thinks. And so I just wanted to ask it, what a fully renovated, like new, property in that area is going to be worth. And it spit out between 300,000 and 340,000. That's at least getting us closer. But it is, if you read the details of it, when it made me think, well, okay, the 300 is where we really should be. But at least that's higher than the 271 and the 270 that we were looking at before. So I don't know. I thought that's kind of interesting to just ask it. Obviously, without having access to the specific comps that or having access to the MLS and looking at real comps in the area, it's very difficult. Which is why I like when I can do that in markets that I have MLS access, but I don't here. I did want to point out the comps that Mogul is using, right? And so this is happening again. We've seen this several times where, okay, this is the subject property, and they're using, okay, this is the first comp, this is the second comp, this is the third comp. All of these are further away than I would want to be. If I were, if this were in my market and I were trying to get comps for this, I'd probably just use this little area right here, right? Like, I definitely wouldn't cross a highway. I wouldn't want to cross it. If I were going to pick a bigger area, maybe this section here. But to go way over here and way up here and across the highway over here, this doesn't make a lot of sense to me. And we've seen them do this a few times. I'd love it if they gave us some explanation of, okay, why are those the comps we're using? Like, I get it, like, we might have to use those comps to get to the, to justify the price, but like, what makes those the right ones? And then when I looked at those, okay, this is the most expensive one. It's actually 1,364 square feet. So, if you took away 300 square feet, we should be much lower here because, single family homes are typically priced per, dollars per square foot. Now, they tend to, as they get bigger, the value of each square foot goes down a little bit. But, in this price range, I mean, it's not a good comparable. Like, for me, I try to never use a home that's more than 10% different. Now, they're saying, well, this is 1188 square feet, but if this person did this properly, which I guess, if you really wanted to know, you could go back in the public records and say, okay, is this air conditioned square feet, or is it, is it just gross square footage? And my guess is this is just going to be the air conditioned square footage. Now that I brought it up, I just want to look. So let's see if we can see. Let's see how long this is going to take us to do this. Go to the basic search. Can we do this while I'm doing a video? I don't know. I don't know if it's going to work or if it's just going to break. Oh, hey, look at that. All right, so I think we're going to be able to do this. It's a little bit slow. Okay. And, it'll be funny if I'm just wrong about this. Scroll down here. No, 1360. So if we use the gross area here, there's 1691. So 1364. So in apples to apples comparison, this home is way bigger than our property. So this isn't a great comp. Anyway, right? Even though it's far away too. So we're moving too far away and we're using properties that are too large. And so I'm just going to assume that these are the same. Now, we do they have a financing contingency, which also indicates that, if it doesn't appraise, it's not a separate appraisal contingency in the contract. I closed it for some reason, but while I was doing this, I closed the tab on, but it's not a separate appraisal contingency. The contract indicates that there is some separate appraisal contingency that you could add, but it's not there. Can I do this while we're doing this? Oh, I could have just went back and clicked the already downloaded one. It is 5 in the morning. I haven't been to bed yet. Probably should make time some other times to do these, but this is when I'm up and actually working on this. So yeah, this is, um, it's contingent upon this, and this is 1, and then 2, buyer's mortgage broker or lender having received an appraisal or alternative evaluation of the property satisfactory to lender if either is required by lender, which is sufficient to meet the terms required. So, it does say there, we get to have an appraisal and we get to back out if it doesn't appraise, up to the lender standards, right? And that always worries me when you just use this and you don't use like a true appraisal contingency. And I'll show you what I mean. They indicate on here that there is, that's way down here, that there's an ability to use, let's see, an actual appraisal contingency addendum. I don't know. So I don't know why this is sort of, don't disturb the tenants yet. And yeah, and so it wasn't included. They're doing the same thing in Texas. We have a actual appraisal contingency, or you can just rely on your lender saying, no, I'm not happy with the appraisal. And so they're doing that same thing here. The real difference is there could be a situation where the lender says, I'm still willing to lend you all the money we agreed to, even though the property is not worth what we thought it was worth, right? And they do that just by changing the LTV. And that, to me, that's problematic. Like I always want, and when I do contracts for my clients here in town, I'm always using, or even for myself, I'm always using an appraisal contingency in addition to the financing contingency. It's sort of the belt and suspenders strategy, but it does give you a little bit more, and I don't know, I'm not an expert in the Florida contract, so maybe it's not the norm and people are perfectly happy to use this one here, but it does worry me a little bit. So yeah, I mean, this is a scenario where it feels like we have a valuation problem again, right? I mean, it seems like $350. It seems like we're paying $50,000 too much. And okay, we're going to get some furniture and fixtures and equipment, but what are we really getting here? 6 beds, 6 nightstands, some kitchen stuff. Like normally you get your appliances anyway. Sometimes the refrigerator is not included, but usually all the rest of appliances are included with a home sale. So we're not getting a ton of furniture, fixtures, and equipment. It's not like with the short-term rentals, usually because you have like higher end stuff and you have multiple, more rooms that are, I tend to value the FF&E a little bit higher with those. With the Padsplits, I mean, it is pretty sparse furnishing, and so it doesn't seem to me that we're getting a ton of value there, right? And so, okay, could I go in this market, buy a home this size, buy a 4-bedroom, 2-bath home this size, already renovated, create 2 new bedrooms, and be all in under the price that this is listed, under the price that we're paying for this? I think the answer is yes. I mean, it seems like we're overpaying here. I mean, that's what strikes me. Now, of course, maybe they get the appraisal, it comes in low, they get to renegotiate. I think that's possible. It's not necessarily what's going to happen. We've already seen sometimes when we have had an appraisal contingency and an appraisal came in low and we still move forward with a sale, because they were able to adjust the financing and make it work, and it didn't hurt our the average yield or the IRR, and so they didn't put it to a vote because they said, well, as long as we're not outside the parameters of our deal, that's fine. And that's something that there's definitely room to do that on this deal because it's at 70% LTV, and so they could bump it up to 75 even with a low appraisal and make it work. So what's going on? Why do we keep running into this? Because one of the things that they talk about is, this is an off-market deal, right? They're getting deals. This is a Padsplit exclusive. It didn't get listed on the market. Typically, if I'm buying off-market deals, I'm expecting to pay below market, right? If we have that's part of the reason that real estate investors spend a lot of time and money to get to sellers directly often. But it seems like a lot of our off-market deals aren't actually us connecting with, sellers directly or Mogul.Club. It seems like it's actually like brokers that are bringing them pocket listings. And And so we have exclusive access to it, but it's not necessarily a discounted, right? And so I'm starting to worry that Mogul is getting a reputation for being somebody who's going to overpay for yield. Overpay for the property because the yields are high. And that's what it looks like on a lot of these. This has been quite often now that I've gone through this. I don't like the comps they're using. The sizes don't really match up, right? And so if you look at these comps that they used, they said 1,200, 1,400, and then they said ours is 1,200. Well, no, ours is 1,054, right? That 1,188 is not. It's not an apples to apples comparison to call it 12. And so once you adjust for that, it seems like we're paying a significant amount more than we should be for the property. In those comps we couldn't even find comps all in this little area that would help us. And so that, I don't know, that's pretty problematic. And, I've mentioned it several times. Mogul's been my favorite for a while. They still are. Even with this valuation issue, I would pick this deal over, most of virtually any $50 token on Lofty, right? But when I start to compare it to, okay, I can buy this or I can buy a discounted, like I bought some tokens on Lofty today for I continue to. The severe, the deeply discounted ones is that's where the value is coming from. And I bought some on Arrived a couple of weeks ago, right? Again, because it was a deep discount. When I start to look at what we're paying for these, the basis really, I get worried, right? And there are deals that they're bringing to market, or even BrickSave, right? Like, again, BrickSave's deals, I'd pick any Mogul deal over anything I've seen on BrickSave. And again, just because that's my position doesn't mean it should be yours. But if you have to pay, their original asking price for it, any of them where there's the opportunity to get some discounts, well, all of a sudden some of those deals start to look quite a bit better, even if that platform is doing a terrible, the other platforms are doing a disservice to anybody who's paying full price for them. If you have the opportunity to do some work, come in, find the deals, buy them, it starts to be problematic for me. And I guess that's why I've passed on quite a few of the Mogul properties recently. It just doesn't seem like we're, and I've mentioned this before. My day job, I run a small team of agents in San Antonio, Texas. All day, every day, we are helping investors find properties. Some of the time we are paying market value or close to market value, because it's a property that is, perfectly suited for a short-term rental or something like that. But our main goal is to get a deal, right? To get a discount to market value, to get significant concessions in addition to the discount. That's the goal, right? And if we are paying over market value for a property because we have that in place yield, I'm just not sure that's a position that I'm willing to be in. Now, you can think, okay, well, we buy this and there's holding costs, and buy a different property. There's holding costs, there's construction costs, then you have to fill it up. I'm having a hard time getting to, okay, yeah, but that's going to be $50,000 to $75,000 to do that. I mean, maybe it is. It's tough. It's tough to decide. But yeah, I like this one a lot more than I like the big Padsplits that we've seen recently in Houston. Like, I like that it's 6 bedrooms, 2 baths. I like that you could turn this back into a single family home. Now, if we turn it back into a single family home and it's worth $275 or $300, that's not helping us a whole bunch, but it's much better than if we have a 10 bedroom, 10 bathroom home that we're stuck with and can't do pad split anymore, right? So I think from that perspective, I like this deal better than a lot of the recent deals. I like the market, right? Tampa, I think, is a great market. Not that I don't like Houston, but I think this is a good market. Um, it is really my only complaint, I think, about this one. That they're really just stretching for value, right? We're using a square footage. It's not really the right square footage. We're using comps that are way outside of the area. And one of the things I'm curious is if this is Mogul just getting bad advice from a local agent who's trying to sell them something, or if they're the ones who are stretching to try to justify this price. I mean, I'm just not sure. One of the things I was curious about is like, well, is this, was this other sale an operating pad split? I didn't see anything that made me think that it was, but I don't know. Because it's not currently listed, so it doesn't have the listing description. But just on the ones where I was looking through pictures and stuff, it didn't. I mean, obviously you don't see a cat stand in your pad splits, so I don't think that one was. I guess you don't have all the pictures there, so I don't know. I don't know why how they came up with these comps, right? That are all different. Significantly larger, at least 10% larger, and outside of our area. Yeah, it's problematic for me. I don't know. I'm having a tough time being real critical of Mogul because I think they do a ton of stuff right. But it is, I mean, this valuation issue that now we've run into it several times. It worries me that that's the direction, right? Like, if you think about the very first property that I bought on there, it was the Axelrod, and we got a big discount, at least from the list price, right? And it seemed also to be a good value. And the next one, the Rhodes, I think immediately appraised for more than we bought it for, right? And I think there's been one or two others that I bought through them that was the case. Maybe just one that it appraised for more. That's what I'm used to doing, right? As an investor in real estate, like, I'm not trying to buy at, okay, it made the appraised value, because a lot of times the appraisers are just going to, because we do have that contingency. A lot of times the appraisers are just going to hit the number that it's under contract for. And it's just human nature that it creates an anchor in their mind. They know the contract exists, and they basically look for deals. There's a confirmation bias when they're looking at comps, and then that gets them to where they need to be. And I don't know if that's what's happening. When they do this, right, it would be fantastic if they said, and I know I've asked them about their comps several times on conference calls, so I think they probably have had enough of me asking about it. If this is an issue for any of you guys watching, I think you should ask this question too, right? Ask them directly. When we get these comps, why are we using ones that are did these come right out of the appraisal? And if so, I mean, that'd be shocking to me if they did, right? Because I mean, I would expect the appraiser to understand the the air conditioned space, the heated space difference, right? But what is driving? Who's driving the bus on picking comps that are so far outside of the neighborhood that that the subject property is in? Because, like I said, we've seen that quite a few times. Why are we moving? Messing with the size of the property a little bit to justify it. Because I understand, like, wanting to buy this property and being willing to pay up because of the yield a little bit. Because you have just such good yield. And if we just bought this and held it forever, and we had no problem in the future, we're not regulated out of business or something like that, then this would be a property. Yeah, I'd be perfectly happy buying it and holding it forever and getting a strong yield out of it. But that's not the business plan, right? The business plan is to sell it sometime in the next 10 years. And if that's going to be the case, we can't be, the appreciation has to be based on a realistic number, right? And if it's not, I think that's problematic. Yeah, that's it. I think that's all I'm going to say about that. I think I've beat that horse, that dead horse, to death again. I don't think that's the expression. Honestly, I'm still tempted to buy this one, right? Because of all the things that I like about it. I really like the 6 bedrooms or smaller pad splits. I really like the pad split model. I like the yield. But for me, like the basis is, I like we have no flood zone issue. I know, the spot crime map was a little bit weird. One of the things that I should have mentioned, that neighborhood scout, that, it's picking pretty large areas. When it is doing, shading an area. And so it's possible that, that's picking up crimes that are just outside of our neighborhood. And that's why, the whole area was dark, but maybe it's not necessarily, right where our property is. So there's a lot that I like about this one. And I really wanted to, I was very much thinking I was going to buy this until I dug into this valuation, and I just can't get over, that we're such a smaller property, and I mean, I don't know, is that porch actually closed in? I couldn't find a good picture. Oh, I did have one other picture open. Where is it? Well, maybe I deleted that. My window is freezing. Hopefully my recording is still actually going. I think it is. Sometimes the little thing freezes, especially when I still have a lot of tabs open. There we go. I think that's fixed now. There it is. Is that going to open? Oh, I always talk about parking, right? I think that's one of the most important things, and there is a lot of parking, most important things for the pad split. And there's a whole bunch of parking available. Oh, great. Now I'm going to pause this and let my computer stop thinking. Oh, nope, there we go. So, it is a corner lot. So you have, although it looked like pretty narrow, so I'm not sure about street parking, but it looks like they've set this up with like crushed rock. So you have all parking back here. So that was really good. And then you also have, now I'm going to just close all these. I'm going to pause it and let it work itself out. All right, sorry about that. Closed all the tabs, and I think it's fine. And so, the parking, I think, is perfect, right? You've got a corner lot. You've got a lot, the access to the backyard, where it looks like they've set it up for parking. That's what I think. I think that's what we're seeing here. I mean, maybe this is the front yard. Actually, you do have a front door. I guess this is the front yard. But anyway, whole bunch of space. With the corner lot, and the corner lot just always makes it easier. And then you do have the bus route real close, right? So it just checks a lot of the boxes for me. And that's why, like, I really have thought about maybe moving forward and buying this one anyway. Because the Mogul guys just strike me as really knowing what they're doing, in general. And so it makes me wonder if there's something about, some of these markets that they're just getting a little bit better info than we are about the comps. Because obviously we're limited to what's publicly available. I'm not talking to agents in that market. I don't have, because Zillow isn't perfect. None of those websites are perfect. And if these comps, if I hadn't looked up and seen like, okay, that this one actually is 1,600 square feet when you're doing an apples to apples comparison, well then, maybe I'd want to use these, but I just don't. I don't know. I think I am going to pass on this because of that. It's a big issue, right? And it's, 50,000, maybe 75,000, somewhere in there. I think is a little too much to want to overpay just for it to be, an existing pad split that's operating with history, right? I think that if I wanted to, I could buy another home in this neighborhood, get it up and running, holding costs and all, and still be all in for less than what we're paying for this. And that's what it feels like. Obviously, I haven't done a detailed analysis to know that that's true. I just don't, if we're gonna start to, and it's not like in Houston where they're now creating their own comps, right? Like, because this is a single family home. It's not a purpose-built pad split. So yeah, it just feels problematic to assume that it is, to just use a price that's so much, so far off from what we're seeing for, because of the change in size. And it's interesting because here they have the right size. It's only here that they have the other size. because of the size and location, I just don't feel good about those comps that are provided. I just would love to see. I really just want to understand why. Like, where are those coming from, other than they're the only ones that are high enough to justify a $350 price. Anyway, I think I'm even worse. So I'm sorry. Very rambly video today. I apologize. I know I've been talking almost exclusively about Mogul lately. I've done a bunch of their videos. I do have some stuff about Lofty I need to talk about, and a little Arrive stuff. Hopefully I'll get those out sometime this week. I just haven't been able to put one out every day like I had been. I'm going to try very hard to get back on track with that. Anyway, until next time, I'm going to just keep making mistakes so that you don't have to.